Welcome along to this Skype interview where I'm joined by Michael Wright of Rental Income Tax Advisors, RITA for short, and we're going to be discussing the biggest trending topic for landlords in recent times, and that is the summer emergency budget, a real bombshell for landlords. And Michael, have your phones at RITA been ringing off the hook?
Yes, considerably. Yes, it has been an extremely busy time since the budget recently. It's mostly been from, of course, the higher earning landlords and those who are in the 40% bracket, who also have mortgages, as those are really the landlords who are most affected, and really. I think it's been mostly that the Revenue and Customs have pushed the fact that they do class buy-to-let as an investment rather than a trade, which is why we've also seen that it's not affected, say, furnished holiday lettings, for instance. The government have stated that it's supposedly 1 in 5 landlords that have been affected by this change that's going to be implemented from 2017 onwards, although these 1 in 5 landlords do quite often hold quite a big portfolio. So yes, it's really from 2017 it all begins. That is going to be when the 4-year phase-in starts, so that once we get to 2020, the rules will be fully in force. The main difference from what it was previously to what it is going to be is that whereas before you could include your mortgage interest when calculating your rental profit, it's now not going to be factored into that, and instead you would just get a basic rate deduction at the bottom when you calculate your tax liability. Why that has been an issue for not just higher rate landlords as well is we have had quite a number of landlord clients who are in the basic rate band, but because of this change in how you are going to be calculating the profit, their profit will now push them into the higher rate band when we get to 2020. So it is quite a change and quite catastrophic really for quite a number of landlords, and really I think it's worth bearing in mind as well whether or not interest rates are going to rise as well, which could impact it quite heavily as well.
Yeah, definitely. And RITA, ever supportive of the landlord community, has produced a post called 5 Ways to Beat the Budget. So we thank you for that, Michael. But what would you say is the kind of biggest overarching strategy that most landlords will be able to apply to minimise the risks, minimise the impact of these changes?
Well, to be perfectly honest, the situation really is that there's not really one size fits all. It really is a case of everybody's circumstances are different, and whilst there will be one solution that will suit one landlord, it might not suit the other one. Really what we advise to landlords, whether or not they choose to use our services, is to really look at the situation you're in now, look at where you're going to be come 2020, and then look at the different situations you could be in, and then really sort of do a before and after scenario to try and see, well, this is your position now, this is what it could be, and this is what it could be using option A or B. There are various options you could look at. We've mentioned previously in that post that perhaps a limited company might work for some landlords. There are quite a number of pros and cons for that. I mean, the main reason people are attracted to companies is the lower tax rate, which also reported in the budget that the tax rate is actually going to reduce as well in the coming years. As well as that, there is also certain cons as well to operating in a company, is that although you've got the lower rate of tax, the tax is charged on the profit. And at the same time, you've got to work out a way of extracting that profit from the company. And it's going back to the budget again, it's then also worth considering that they've changed the dividend rules now, which was often a popular method of extracting profits out of there. So yes, there's very many considerations, and then not least as well, if you're not owning properties personally, you've got the issue of not having personal allowances anymore in the company, and the list does go on. There's also the possibility of people exploring Form 17 options, whereby people can sever their joint tenancy and alter the beneficial interests, and effectively, so if someone has got a property that's held 50-50 with, say, their wife, they could alter the profit split so that the higher earner could, say, be attributed 1% of the property profits, and the lower earner 99% of the profits. That's something that again is not a decision to be taken lightly, and again it's worth reviewing all your options just to see if that is the best option for you to take. But as we say, really, it is no one size fits all. If there is any bonus at all to come out of the budget, which there's not really very much for landlords, is that we have got time. The mortgage interest changes start in April 2017, so there is a bit of time between now and then to work out what is the best solution for you. Going on to other changes as well coming up, the other important thing is in April 2016 is when the wear and tear allowance is removed as well. So those with furnished properties can no longer claim that. That was a good perk in the past, because even if you hadn't incurred furniture costs, you could still claim that wear and tear allowance. And I believe that was another item we featured on that Beat the Budget, as for those landlords it may be best in certain circumstances to hold off any non-essential purchases for now, as just a little workaround in the meantime.
I really like your suggestion to look at a now and sort of before and after comparison, and I think the message coming through on this video is that landlords are probably going to have to seek specialist tax advice to deal with this situation, because it's actually very complex, as we've kind of alluded to. I just want to finish, Michael, by saying that both Michael and myself are going to be involved in a big debate at the Landlords and Lettings show at the Barbican on the 10th of September. I think it's happening at 4 o'clock, and I'm hosting the debate and Michael's one of the panellists, and we'd like to invite all Property Tribes members along, because it's a great opportunity for them to meet you in person as well.
Yes, and I think as well to get their voices heard as well, because this is quite a major change, and this is very important, I think, to the buy-to-let market in general. And yes, as you say, it would be very nice to meet some of the Property Tribes community as well.
Brilliant. Well, we'll put a link to that underneath this video, and also to our survey that Property Tribes Financial Services is undertaking on behalf of the lenders, because the lenders have concerns as well about how this is affecting landlords. So I think it's great if we as a community all work together to get our voices heard and to come up with solutions. So thanks ever so much for your input, Michael. Really appreciate it, and see you at the Barbican on the 10th of September.
Okay,
Thank
you
you
very much. Okay.